Hello everyone. The fourth video in this series is about tax management. Income tax. This is the tax imposed on income generated by individuals and businesses. For example, for the fiscal year of 2022 in the US, there are tax rates established for each section of income. For example, if your income was $100,000, you wouldn't pay income tax based on the tax rate for that bracket, which is 24%. The tax would be calculated as 10% till 10,275 plus 12% for 41,775 minus 10,276 plus 22% for 89,075 minus 41,776 minus 24% of 100,000 minus 89,076. The total tax would then equal 17,834.92. Number 2, sales or consumption tax. This is imposed by the government on the sales of goods or services. This usually varies by state in the US. For example, Georgia has a sales tax of around 7% depending on the area within Georgia. Some areas go as high as 9% and some as low as 4%. Number 3, value-added tax or GST. Value-added tax or GST is imposed on a product at every stage of its production. In some countries, GST is waived for tourists who enter the country if they are able to show evidence of traveling from a different country. Number 4, excise tax. In order to discourage the use of harmful items, an excise tax is imposed on them. Number 5, property tax. This is imposed on individuals or corporations that own properties. The property tax depends on the area of the property. Number 6, estate tax. There are certain thresholds set by the government above which an estate needs to pay an estate tax. How taxes affect Paycheck. Number 1, federal income tax. The largest reduction in a paycheck is due to the federal income tax, which is calculated as described earlier based on income sections. Number 2, other reductions. In addition to federal and state taxes, other taxes that get deducted from the paycheck include Social Security tax, which is 6.2% of wages for both employer and employee, Medicare tax, which is 1.45% of all wages, and an additional Medicare tax if wages exceed $200,000. Number 3, state taxes. State tax is additional to federal income tax and varies by state. Some states, like Florida, don't have any state tax. Number 4, W-4 forms. W-4 forms need to be updated every year. It indicates how many dependents an individual has, and that will dictate how much tax is withheld. If too little is deducted as estimated tax, then there is a result of a penalty and interest that needs to be paid at the end of the year. If too much is withheld, then the excess is refunded. Tax obligations. Number 1, taxes are due on April 15th every year unless extensions are granted. Number 2, for U.S. citizens or alien residents living outside the U.S., taxes are due on June 15th. Number 3, students need to include scholarships and grants as taxable income and file taxes every year with all the income received. Number 4, businesses and self-employed individuals also have to file taxes, and the amount depends on the type of corporation. Number 5, taxes should be paid on time to avoid penalties and interest. And number 6, there are a number of softwares available to pay taxes. Some of them include TurboTax and Tax Cut by H&R Block. Earned Income Tax Credit. Earned Income Tax Credit is a refundable tax credit which helps certain U.S. taxpayers with low earnings. If the earned income is low, then there is a tax credit that is given based on the number of qualifying children an individual has. To make sure refunds are received quickly, file taxes online and give an account for the refund to be deposited. If one is filing as married filing jointly, the credit eligibility can be seen on the screen. For example, if income tax is filed as a married filing jointly and there are 2 children, the limit of maximum annual gross income to be eligible for a credit is around $54,000. Avoiding tax penalties. Number 1. Penalties are calculated based on the amount owed and how long it has been overdue. Number 2. Penalties range from 0.5% to 25%. Number 3. If the tax is filed on time but payments are late, the penalty is around 0.5%, but late payments penalty is 5%. Hence, it is always important to file taxes on time, even if the payments are made late. And number 4. To avoid underpayment penalties, individuals must pay either 100% of last year's tax or 90% of this year's tax. Thank you for watching, and I hope this has been an informative video. In the description box below, there is a link for a Quizlet which will help test you on tax management. Comment down below if you have any suggestions or questions, and click the like and subscribe button. See you next time.